Good afternoon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. And for my favorite conversation of the month, JJ Kinahan, Chief Strategist at TD Ameritrade, joins me at the market site. Thank you, as always, for joining me to talk about TD's Investor Movement Index. And this is a special one because it's the first time it's reached over 7. And for as long as I've been covering this, this is the biggest point move I've ever seen.
Yeah, you know, Jill, it's unbelievable. And as you mentioned, the first time over 7. And again, this measures really the exposure that our clients are taking to the market overall, as long as they've traded at least once in a month. And so what it's showing to me is that we had sort of a tough, I won't say tepid response, but people went from sort of their ankle to their thigh, and now they're above the waist. They want to be involved in this market. We're hitting all-time highs in the market, so it's great to kind of see these things intertwining. And the other, really interesting thing to me is, you and I were talking earlier, this is the market that sort of nobody respects. It goes higher, and no one has anything nice to say about it.
Yeah, we saw it in the Journal over the weekend. The headline was something, the markets continue, new highs, and nobody has any idea why. And it's broad-based. The Dow, the Nasdaq, the S&P hit all.
Yeah, it's more than just the FANG stocks, and there seems to be some belief that it's just the FANG stocks. And actually, this is the 6th month in a row that our clients have been buyers. So I'm very happy to see that. It's not like they all suddenly rushed in as we hit all-time highs. They've been steadily buying this market for the last 6 months. So they participated in the rally as we've continued to go higher.
Right, and the mix of net buys this month was a little bit different than June. We actually saw Nasdaq-listed Amazon take the top spot.
We saw Amazon, we saw Microsoft, we saw Alibaba. So it was also mixed. So many times we've just seen Facebook, Apple. Not that they're not great stocks, but it is kind of interesting that our clients are starting to sort of spread their risk out a little bit over other equity names, and as they see things happen from the stocks they'll sell, redeploying that into different names that maybe have either trailed a lot, or I mean, a story like Amazon, it was an incredible month in July for what.
Right, but you're also seeing it in Costco, GE, AT&T. It's such a wide variety of names.
Right, and some of those, like AT&T, particularly, it's interesting as you start to see the millennials versus the older folks. That's just a stock you'll see with some of our older clients. You might not see with millennials. Not that it's a bad thing, but again, as you get a little older, start to look more for yield. And as you and I are talking, you're seeing a 10-year yield right around 2.26. Right. So as these stocks with 4 or 5% yields become very, very attractive to you.
Right. Well, in the net sell end too, you're also seeing sort of older stocks, if you will, like an Alcoa and Arconic, continuing to be sold off. And I think they've been on the net sell list.
They have been, yeah, and a couple of new comers there. Twitter, which was sold right before earnings. A lot of folks were nervous about their earnings. I guess they turned out to be rightfully so to speak. Nike was a really interesting one to me to see that sold after their little jump there. After they had announced that they were going to use Amazon as a distribution partner, et cetera. I thought that was a very, very interesting one that our clients sold overall. So again, what you do see is when stocks jump, our clients, and Caterpillar was another one, and you and I just a few months ago talked about how Caterpillar was a buy. So had a nice up move, had a big jump in July, and our clients actually were not taking advantage of that 4.5% jump. We're sellers of it.
Well, let's take a look at earnings. About 70-75% of S&P companies have reported, and they have actually beat, is what I meant to say. A lot of it is because of a declining dollar. That certainly has to help, particularly the larger conglomerate global companies. Do you think outside of that earnings quality has been relatively strong?
I think it has been a good earnings season because what I really look at, Jill, is the top line. And when I see that, we see almost a 70, as you mentioned, about a 70% beat on bottom line and a 70% beat on top line. Usually there's a decent sized gap there. We're seeing, I believe there's a 2 percentage point gap going into today between revenue and earnings beats. So what that shows me is the companies are making sales. That's a very, very important point. And as you mentioned, some of the conglomerates have done very well because of the weaker dollar, but a lot of companies that aren't necessarily conglomerates are doing well also. And we started off this season with some positive notes from the financials, and it sort of worked its way through overall. We have a really interesting week this week with the retail stocks coming out, and what I'm going to look for there is, of course, you want to see how they do on EPS. What are they saying on top line? What we have seen from stores, from places like Amazon and some of the retailers who have reported earlier, is that we see it in the consumer reports all the time. The consumer's there. The consumer's spending money. are these traditional brick and mortar companies able to go out and attract the consumer? I think this is going to be a week of haves and have-nots. Those that were able to, those that weren't, and those that weren't are going to get punished.
Right, which is always the tale of retail.
Absolutely.
Sure. Okay, and let's wrap it up with this, and this is the million-dollar question, of course. Do you think we have enough momentum for, believe it or not, the last 4 months of the year, 4.5 months of the year, to continue on this uptrend?
Yeah, it is flying, isn't it?
It's really quick.
What I would say is, everyone's like, we need a sell-off, we need a sell-off. Do I think it would be healthy for the market to have a sell-off? Yes. But as I look out there and I see a VIX trading around 10, I'm not seeing gold rally, I'm not seeing bond rally. Those are three of the traditional risk measures. I'm not seeing that happen right now, so it's tough to see anything in the short-term horizon that will happen. I think the Senate and House and Trump administration are going to be a little more pressed on some sort of tax plan as we get to 2018. I think they can probably escape 2017 without one. The real million-dollar question is going to be, is the Fed going to be able to get in one more rate? Employment last week certainly helped them.
Right.
We got PPI and CPI this week. They are rooting for some sort of inflation to be in those reports this week. So I really think that that's going to be the bigger question. If they don't, that may be a stumbling block, but all signs, as we see from the reports the last few weeks, report that they will be able to.
All right. Well, thank you very much for joining me at the
Always
Market
a
Site
pleasure,
as
Jill.
always. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.